Market news now. Most Asian stocks dipped as traders weighed the spread of the Delta coronavirus strain against a record Wall Street close. While awaiting U.S. payrolls data that we are expecting later this afternoon, mainland Chinese stocks fell on the day with the Shanghai Composite down 0.25%. While the Shenzhen component dipping about 0.3%. However, Hong Kong's Hang Seng Index was down marginally, rather up marginally higher as of its final hour of trading. Looking at what's happening in Europe, markets were muted, and investors on that particular front are monitoring a fresh round of corporate earnings, with the world's largest shipping firm Maersk reporting along with the London Stock Exchange. Over in the US stock index futures little changed at this point, especially during early pre-trade ahead of the highly anticipated jobs report. Locally, we were in positive territory as most of the SA Inc. stocks are the ones that are benefiting at this particular point. But to give us a nice check-in on what's happening at the markets and also look back at the week that was, we are joined by Warwick Lucas from Galileo Capital. Warwick, thank you so much for your time. In pre-trade, very early this morning, JSE up 0.1%. How are we looking right now?
Good afternoon, Tash, and to the viewers. I think markets trying to take quite a busy week in its stride at the moment. We've had a nice week, for example, for banks. But I think that was more than offset by the nerves that we saw in relation to both the volatility coming through via NASPAS and the Chinese regulatory actions there. And then, of course, I think the market trying to digest the cabinet reshuffles, including, of course, the resignation of Tito Mboweni and replacement by Enoch Godongwana. So, yeah, a busy week.
Right. One of those, themes for the week that you touched on was NASPAS and process. But what else did you spot in terms of key themes that, dominated market conversation, I suppose?
Well, I would say that the main one has certainly been those. I mean, we're obviously looking forward now to the US non-farm payrolls. I mean, it's a monthly event that just certainly generates a lot of heat, although not necessarily as much light. I mean, we have markets looking to a big number there, and yet. A similar survey, the ADP data, which is arguably a different survey. I mean, that was looking a little bit weaker this month. But then again, ISM employment was looking more positive. So I think all in all, we're looking there from the US data, which will probably come out a little bit later at around about 5 or 6 o'clock. And that hopefully will come out positive. And there's a big number that they're looking for there, something like 870,000, which would take the unemployment down from 5.9% to 5.7%. A big move, and obviously evidence of an ongoing recovery from COVID. And of course, this week that would be a nice sort of bolt-on to the big US infrastructure bill that we saw coming through earlier in the week.
All right. So you mentioned, obviously, we've got a new finance minister. What are some of the challenges that you think he faces right now? I mean, we're right in the middle of a pandemic. One can probably say this is probably the worst time to take a new job as a finance minister, given what our economy is going through.
Yeah, I mean, obviously, it's a hell of a tough job. I guess it's the only tougher one is to be president himself. In terms of who is Godongwana, I mean, I think he's a reasonably steady pair of hands. I think Mboweni has probably spent quite a lot of his political capital, and I think it's important from the ANC's point of view to keep the tripartite alliance on board. I think a key thing that we're looking for there is that he continues with the framework that was originally laid out by Mboweni, which was credible and that the market trusted it, and it was a sensible framework that can provide some future growth and recovery. Obviously, in terms of actual challenges, well, there's a tough budget to balance there, no question about that. I mean, our debt is quite large. It's pretty expensive, especially given downgrade, and we obviously have to work our way through that. So he has to also sort out the state wage framework. And then the key question going forward is can and will he stick to the debt limits that were originally put in place by Mboweni?
Right. So early this morning, news reports saying that Alibaba is anticipating that the Chinese tax breaks that are basically, given to internet companies might start to dwindle. What would the impact be for the likes of Tencent if that were to be the case?
Okay, so I guess in terms of the actual numbers that would come through, I mean, that's obviously a potential negative. But I think it's important to remember that when it comes to tech businesses, they are highly, highly scalable. And what that means in simple terms is the bigger you are, the more profitable you are. Because once you've established your costs, they tend to be pretty fixed. And the more customers you have and the more activity you lay on top of that, the more profitable you are. And of course, some of those Chinese tech giants are very, very big indeed. So I think in terms of tax breaks, they probably shrug them off quite easily. I think the more important question for them is would they be allowed to return to a reasonably acceptable operating platform, or will the regulatory crackdown continue to be really, really hard-fisted?
Yeah.
And I think that's an open question at this stage.
All right, Warwick, thank you so much for your time. That is Warwick Lucas, who is from Galileo Capital.